Ben ritrovati giovedì mattina su Florida New York Stock Exchange, l'indice tutti in territorio positivo che recuperano dopo quella che ieri è stata la maggiore flessione in 2 settimane. Ne parliamo con il mio ospite qui su Floor, come vedete è Derek Orth, che è Designated Market Maker per Brandon e Cryan and Company. Derek, thank you so much for being with us.
Thank you for having me here. Thank you, Lina.
So, Brandon, I was sorry, Derek. I was saying that yesterday we saw a big movement for the indexes. We saw the biggest drop in 2 weeks. Technically, did we see any big major damage?
Well, damage not quite yet. What I am looking at, we have pulled back here, and technically today we're rallying a little bit. We're not making up the damage from yesterday. But in the S&P 500, we have put in, it could be makings of a double top at the 1597 level. So I'm kind of watching that closely. We're around 1592 now. And ultimately on the short term, I'm looking at around 1580 as a short-term support range. You know, we have been putting in a series of higher highs and higher lows over since the course of last year, when the S&P was at 1341 on November 17th. We started rallying. We rallied about 250 points up to that double top range since then. We've had some pullbacks, you know, channel line wise, you know, trend channel, you know, pulling back to a bottom of a range and then rally. So we've been putting in a series of higher highs and higher lows. So what I'm looking for now is this 1597 level. Are we going to be able to push through that spot? Now, what we want to look at here also is when you look at prices, you want to have something else to compare it with, like a momentum oscillator, such as MACD or RSI. So if RSI and MACD are not confirming these highs and putting in lower highs, it's suggesting the momentum could be getting tired on the upside here, and we might need a bigger correction. Ultimately, the last low we've had in this channel was around the 1540 level. So that's the next, you know, highest low we put in. If that breaks, we could have a deeper pullback, maybe to 1525, to kind of digest this big move we've had. So that's technically where we're looking at right now. So right now we're in this spot, we want to see what we do at 1597 here. We can push higher, and RSI or MACD, if you're looking at it, can make a little lower high, but that would be a pretty big red flag according to my book, where if I get a couple of signals in a row where the MACD or RSI oscillator is not confirming the new highs in price, it's something you kind of have to say to yourself, all right, the momentum's getting tired here. We might need a pullback. And cyclically, we're in that May period.
And also, we are very close to a round number. I mean, 1600, more than technical, probably is more at psychological level. And so far, I mean, it's too early to say, but it's proven to be a good support. So, of course, the next few sessions are going to be very critical for that.
Yes, that is critical. And, like, it's cyclically wise, too. We're in that traditional go away in May, sell in May, go away kind of thing we talked about last time. We'll see if that happens. You know, we're early in May still. We'll see how that plays out. But, you know, technically things are starting to suggest, you know, we have to get above that 1597 level. You know, if we don't do that, you know, maybe we'll look at those oscillators to see if we got that momentum behind the push, if it's starting to participate in confirming the highs and making highs with it. You know, that's a big part.
And also the catalyst that we already had. We know that this week, two of the big catalysts for the market. One is today the ECB decision on rates, and of course tomorrow the numbers, you know, the employment numbers here in the U.S. The decision today has been, we can say, widely expected, but Mario Draghi has opened the door to future intervention, so the market is happy today.
Yes, they're seeing that as a good thing. You know, hopefully to help with growth in Europe, which has been stagnant, as we know. That might help the process along there. That'll help the S&P 500 conglomerate companies maybe to, you know, pick up the earnings pace in the Eurozone. That's hopefully a good thing. You know, but it's also, you know, this morning in the States we had initial jobless claims come in that were a little better than expected. It surprised everybody. They're at 5-year lows. You look into different areas of that, why, but and like you said, tomorrow is a big number, and maybe with the initial jobless claims doing you know, a little better, this report, that might affect tomorrow's report too. So maybe that's another reason why I have this leg up. Maybe they're anticipating that the unemployment rate might be dropping a little bit better. We'll see how that goes.
Probably there's going to be a little bit of volatility at the end of the day, because everybody's cautious, expecting, you know, like news from tomorrow. So going back to a technical analysis, you're not following just the S&P 500. We know that you follow also the stocks, you know, the semiconductor. So tell me about that. Which indication are you getting?
Yeah, still we're battling here, struggling at the 440 level. 443 is where we're at now. Technically, I'd like to see it close at 445, and if that happens, we should have, you could have a momentum breakout, confirming, making a new high there on the short term, where maybe we've had a nice run last week. We rallied five out of the 5 days, trading days in a row last week. We're coming in here again. We're up on the week so far. So let's see how, if we can close on the week tomorrow on a high note there, break above that range, we might have some more upside to go in that as well, which could help the semiconductors. And that part of the S&P sector is critical because it has been lagging a little. So maybe that can help offset some other sectors that might have been leading, healthcare, for instance. Now that's kind of starting to have a little bit of pullback. We'll see. Maybe that'll kind of like help generate the market to keep that, one sector helps the other when it makes up the broad base of the S&P. To keep on rising in a sense.
Well, some people are a little bit concerned about the fact that defensive have been the leaders of this rally. I mean, it could be a bearish sign.
Yes, it could be. They're going for those high yield dividend stocks, and it's funny, a lot of the tech names out there are actually in that realm now. So it's kind of interesting that you could see some of that asset, the money assets, going to those good yielding companies. And you're seeing corporate buybacks, you're seeing dividend increases across the board. Corporations are trying to put the cash they have to use to reward investors, and they recognize what investors are looking for. They're looking for that value. They're looking for better than the 10-year benchmark. They're looking to get
they cannot find it anywhere else, basically, only on the U.S. stock market.
They're forced in a way to go to these equities, yes, which that's how they have to get their source of income that they want to generate, yes.
And hopefully that will bring here some more volumes. We know that has been a big problem, even technically, to try to forecast the movements and how a rally is important, or how a pullback is important. We haven't had volumes.
That's true. Volume has been shrinking, but when it comes at the end of the day, one of the most important things is price, as we all know, because price gives you value, what you're worth at the end of the day. I look at volume secondarily because price precedes volume in my book. If I was more or less strict to the fact that I need volume to confirm my breakouts, I'd be on the sidelines and just kicking for years. Yeah, and that would be a problem. So you kind of have to recognize what the new market structure is, and prices are going to go up for whatever reasons. Volume may not be there confirming. There's good volume, but it's just not historically where you're seeing it. Look, and you know what? The volume maybe, like you said, could come back. We break above new highs. That sideline money might just say, okay. Again, I want to see those momentum oscillators confirm these highs we were talking about. We're looking at the charts, and if we get that, maybe we'll see that money flow come in. I'd like to also see when we have that pullback. We could look at that 250-point move we had in the S&P 500 and put one of those, Fibonacci retracement grids on there, that technical 38%, 50, 61% of that move, and see what happens, whatever those market events will be that might create this, pullback. Maybe just see what happens when they get there. See what kind of capitulation we have, see what kind of volume comes in at those critical levels. So we kind of have the doors are open here. We're kind of looking at both ends of it. And, tomorrow and next week, we'll see where we're at.
Good luck for tomorrow. Yeah. Thank you very much, Derek, for being with us.
It's a pleasure. Thank you.
E grazie a voi per l'attenzione. E a domani.